lot of people who want to come here to run global businesses, or at least chunks of them, from London. And if you travel around the world as much as I do, you can see that this time zone does confer a number of benefits for people who host big chunks of their business here. And the framework that goes with that, when people talk about Frankfurt or Paris as alternatives, it's just very difficult for people to can contemplate how they can really run big businesses from anywhere but London in this time zone. The second is, it is a growing city. Again, that actually, if you look around, is surprisingly unusual in Europe right now. And so that has a number of generators of wealth, but of characteristics, which helps us a lot. The third feature, which I think is probably as much as anything, has been the internationalization, not just of businesses per se, but if you want to come here and you want to put your kids through a French school or an international school, or you want to go and play, you can join a community from very, very many parts of the world which has itself critical mass and typically will be treated pretty well. Never forget the legal system. My thought experiment, as I always tell investors, the following thought experiment. Tell me somewhere else in the world where you will be treated identically as an international entity as a domestic. Just think about how many places. I don't need a list of 6 or 7, but just think about 1 or 2 where it's actually true. Ask BP whether that's true in the States. So moving on to the investment market particularly. What I think is quite fascinating right now, and look, London has always been a place where international money has come, right, for a long period of time. But that's also been very cyclical, and one of the reasons it's been cyclical, in my view, is the fact that typically at any one time it's been dominated by particular entities, whether that be German funds, whether that be the Japanese, whatever. But when you look around what the investment market right now, in this city in particular, to some extent the UK too, is just the breadth of money, and in particular the depth simultaneously with breadth. If you look at somebody like Norges, partner of ours, shareholder of ours, if you just look at the amount of money they have told the world that they are going to invest in real estate, the size at which that fund is growing, and the amount of money they have to put to work, it is a scary amount of money for them to have to invest, and they want to invest in London. Look at GIC, not nearly as big, but pretty blooming sizable. Look at Ping An, the first Chinese insurance company really to invest in London. If you look at the regulations in China, the regulations have shifted so that insurance companies can invest internationally. First investment in London. Again, if those of you who are interested in China, if you look at what has to happen in China in order to pursue its own domestic ends, it has to keep the currency to a certain level. It cannot appreciate too fast. That means it absolutely has to invest its capital surplus abroad. A lot of that's going to come into London. My point is simply this. It is very difficult to imagine why all of that money should suddenly go the other way. It may well be, and certainly I think there are reasons why you would not see the same net investment, but to really see a plunge in the market, you have to see net disinvestment. And a lot of these guys just have more and more money to invest. So I think that's a good reason. And then if you look at the facts, look at the rate where Pollen Street traded, look at where people are talking about the Gherkin trading at 4.25 or where it ends up. These are very, very unusual sorts of numbers. Having said that, I'm always a believer that investment markets, first of all, are always, whether that be real estate or anything else, are always dangerous places. They're particularly dangerous places if the underlying economics don't support the investment flows. One of the advantages that London has right now is that, particularly in commercial real estate, there is a relative shortage of supply of high quality versus the demand. As a consequence of that, guess what? Rents, particularly in the West End, are going up, and I can easily see that continue. Why is that happening? As I say, 2 prime reasons in our view. One, the economy continues to improve. That means that on top of the number of people who are actually coming to London in order to build their business, people are looking for more space. And so you continue to see people simply going from small offices to bigger offices, or looking to people like us to provide them with bigger space. So that combination, people coming into London or expanding individual, is driven in particular by even domestic businesses needing more space. It's a very positive underlying fact. It should keep rents rising, and in turn that's supportive of the investment markets. I hear so many stories from people about how tough it is and 97 things that can go wrong in this country, almost all of which by the way are true. But when you get to Washington, or when you get to Beijing, or when you get to Hong Kong, people continue to look at this place and say it is a bastion of stability, it's a bastion of places where they want to invest, they want to be, and I think we shouldn't forget that.